sometimes when you say the words together, housing affordability crisis, it can also be a bit of like a generational thing. Maybe, not everyone totally recognizes the problem. What is the crisis, right? So I was hoping you could, help me just right off the bat here to summarize exactly what we mean when we say there's a housing affordability crisis.
Yeah. So essentially housing affordability refers to like the cost of your house, your home, whether that's rental or mortgage pricing compared to your wage, what your take home pay is. So generally the metric that folks use is what you're paying in housing costs should be equal or less than around 30% of your income on an annual basis. So what we're seeing is a lot of stagnation in what people are taking home for their income. And meanwhile, massive explosions in how much it costs to rent or purchase a property. For example, in Denver, where I live, the average price of a one-bedroom apartment has gone up by 50% in just the last 4 years. So that's like a crazy increase for renters to absorb. And when you're renting, like you're really just subject to the market growth and expansion. Yeah. So your income, the average raise is like 3 to 5% a year. That's not even keeping up with inflation right now. Yep. And then on top of that, have to absorb like 20, 30, 40% increases in your rent year over year. That's just not sustainable. And then on the mortgage side, one great thing about buying a home is that you're kind of locked in to a monthly price, not including like taxes or insurance for your property or anything. But in our parents' generation, like my parents own a house, your parents probably own their house. Is that right?
Yep.
Yeah. So back when they were buying their houses, like first of all, there was a lot of government money kind of funding home purchases back in that era. And also the lending percentages were lower, and the percentage or the dollar amount that they had to put down, like for a down payment, was much lower than what we're seeing today. Like right now, I think the average home price in the US is $500,000.
Yeah.
So if you want to put 10% down, that's $50,000 that you have to just have in your bank account just on closing. And that's not achievable for most people who are taking home, like, who are wage earners and who don't have like their parents to help them with a down payment or whatever. So that's why, it's becoming less and less sustainable. And then you have, Zillow and all these big corporations buying up massive amounts of real estate and just artificially driving the price up. And then you have like the low housing stock to begin with, which is like exacerbated by the fact that we're having a major supply chain issue right now. And it's super hard for contractors to actually get building materials. So it's kind of like a hot mess.
Yeah. Yeah. You've nailed it. Literally exactly. And I have so much to say about, everything you just went through. One of the other frustrations I see is because we have like the bidding wars right now, right? With every house, with the low supply. And what you were saying about the people with, first of all, how do you just get together $50,000 in savings to begin with, right? And then, when it becomes you versus this other offer, and this person has sold a home and maybe they have, money they just have other assets, right? You tend to lose out to them too, right? Like you have to really beat them out substantially. That's what I see, at least in some of the bidding war situations where people are afraid of like property's not appraising, and then they want to make sure you have the assets to kind of like, adjust the sort of like down payment, equity, whatever. We don't have to get too deep into it.
And like how do you compete with like a quick close, the desire of a quick closing? Like if some guy is like, I'll pay $600,000 in cash, and you're over here with your like 580, which is like, 90% mortgaged.
Exactly.
Who's winning that battle?
Exactly. I'm glad you mentioned the rent inflation. I'm glad you mentioned the institutional investors. It's crazy, and we are, we're constantly talking about these supply versus demand constraints in real estate. You have all this experience in like private development. You worked in New York City and other major markets. When I ask this question, I'm thinking more about suburban communities like a Marshfield, right? That's a town you at least have some experience in as a resident. I don't know about, professionally, but you get it. when it comes to new development, what are the major constraints? Because I think we're going to touch base on a few, and I want to get your opinions on, what changes could and should be made as we go along, what changes might be misguided, like what in your view are, the major constraints for new development today?
Yeah. So I feel like this crisis is this weird combination of a bunch of challenges we're having in the US right now, one of which is like a labor shortage, and especially a skilled labor shortage in trades. Like if we're thinking about our generation, like many of us got liberal arts degrees, right, and went into like these kind of not producing trades, and so there's kind of like a lack of people who focused on construction and kind of the skilled labor that you need to build houses. So a lot of the major construction companies are having trouble just getting guys in, and really having challenges with the labor shortage issues. The supply chain issues are a major issue too, but I think the area that I really have a lot of experience in is with the regulatory side. So the regulations, the restrictions that local governments place on new development. I'm not saying that I'm not a proponent of any regulation whatsoever, but I think we've really kind of gone off the deep end, and we really need to kind of rethink our regulations to mitigate some of the challenges that we're seeing with the housing crisis and get more houses built, and especially multifamily.